So hi, my name is Baral Kfir. I'm part of the investment team at Vintage. In Vintage, we are a fund-of-fund investor, a secondary investor, and a growth stage investor. With us today, we have Philippe Botteri, a partner at Accel. And before Accel, you were at Bessemer in the Valley. And before that, you started your career at McKinsey. So maybe before we speak about what's happening today in the market with a focus on cybersecurity, I want to take you back to 2020 and 2021. And valuations were super high. And we've seen companies that are raising basically every 6 months, sometimes double, triple the valuation of last time. How did you handle this type of market? How did you rationalize valuations on your end? Did you shifted like the strategy of the fund in some way to meet those conditions?
So the way Accel work and the way we want to make our investment is based on what we call prepared mind. So this is basically comes from a quote from Pasteur, who's a great scientist and inventors, and basically said, chance favors the prepared minds, right? That means that, if you're prepared, you can find the needle in the haystack because you have actually looking at the right haystack and you have a good idea of where the needle can be. We want to invest, in the best team in the area, which we think have the best potential. So this is how we have, always invested since the firm was founded more than 35 years ago now. That's been our focus in then. That's how we've managed the past couple of years. Now, obviously, then there is a layer on valuation, right? You can find a great company, then there is a question on valuation and whether this becomes a great company, becomes a great investment or not. And I would say that overall, we are not the one deciding on the valuation. I think the market will decide on the valuation. I think our experience has shown that if you find the right team, the right entrepreneur, and the right sector, this company will actually grow into the valuation and generate the biggest return. So I think the market dictates the valuation. Our job is just to make sure that we find the best, the best companies and the best founders, and you will find it. And so that's kind of how we approach our investment. We're very thesis driven, so we're looking at a space, analyzing all the company in the space, develop a deep thesis on the space, and kind of look at all the different company in that space. And that said, of course, in the past couple of years, given the way the valuation have evolved, we've also obviously thought about what stage do we invest. I think on the early stage fund, overall, we tend to invest, earlier, a bit earlier than we used to compensate for the valuation. But I would say that overall, I think for us, investment is really about, making sure we can find the best founders and the best companies and become great partners and help them achieve their full potential.
So 2022 obviously looks a bit different, and the past few months are showing, I'll call it a correction in the market in that sense. Does that change anything?
Well, I mean, I think obviously the past few months have, things have reset. Things have changed. I think valuations are not at the level that they were a year ago. I think the difference between kind of this reset versus what happened in 2008 is that in 2008, companies did not add the past couple of years that we had and didn't have the chance to raise as much money as companies have been able to raise in the past couple of years. So now we are, yes, we are entering a phase where, kind of in some area, we're seeing demand slowing down for these companies. Obviously, valuation have reset on the public market. I mean, if you look at a lot of tech sectors, the high growth company have reset, 40, 50, 60% in terms of valuation. But companies have a lot of cash, right? So of course, there is a lot of work we're doing with the portfolio right now to make sure that that cash is invested wisely and that they take into account the fact that the top line may not grow as fast as it did in the past couple of years as demand is softening, and make sure that the costs are under control. But there is no existential threat to this company, because these companies a lot of them are sitting on a lot of cash. And also that means they don't need to raise, right? So I think the good companies are in a situation where they need to grow into their valuation, but they have a lot of cash to grow into their valuation. So obviously this means that the market, has slowed down, especially on the growth side. I think on the early stage side, I would say that the seed market is still quite active, but we're seeing the seed investment kind of normalizing to where they were in 2018, 2019, and now we're starting to see more some of the Series A coming along. So yeah, I mean there is a reset happening. I think this means for us that we're spending a lot of time on the portfolio to make sure that they adapt their plan to this new environment. I think this will create in the next 6, 12, 18 months great investment opportunities.
I think it's a good point regarding the cash reserve of the companies, and especially from someone that has been investing in companies for the past 15 years or more, and you've seen a recession or two. Any takeaways, anything that you're taking that is helping today as well?
Well, I would say, I think for the companies, I think as we are moving into a more challenging environment, and the budgets are going to be tighter, I think the key is really to focus on ROI. And I think companies which have a very clear ROI story for their customers are going to continue to do very well. And I think we're also seeing some sectors have been more impacted than others. I think one area which has been interesting is security. We're seeing they're still going very, very strongly right now. I think if you there was a post from the CEO of Vendor on LinkedIn recently, which was so Vendor basically is is a startup that is providing a spend management solution. So they monitor especially all the software cloud spend. And what they were saying is that in Q2 they saw a decrease in spend around 16%, and churn was accelerating. There were a set of vendors where they actually didn't see any change versus the previous period. And it was interesting to see that out of the top 10 company which didn't see any change, 3 of them were in the security space, and I think Snyk was the number 1 on their list, which was I was very happy to see.
Yeah, we'll get to security in depth more. Do you think that your role as a board member has changed, like during the past few months? Like, how is it typically, generally? What type of help do you provide your CEOs? What type of advice they are asking you these days?
Yeah, so I don't see the role of board member. I don't see it different. I think our role is to be kind of the first and closest partner to the CEOs. We want to be their first call when they have questions, and obviously these questions have changed in the past couple of years. It was more about managing growth and fundraising situation, and how to solve like the talent acquisition problem, making sure that you have access to the right talent. And so we obviously did a lot of work with our companies there. I think now it's moving into a phase where it's more about efficient growth. And so it's about how do you make the company more efficient? How do you make like the acquisition of this next dollar of revenue more efficient? Because now the capital has a cost versus, in the past couple of years, capital was free. So any incremental investments made sense because the cost was very low. So even if the ROI was low, it did make sense. I think now we are moving into an environment where the cost of capital is pretty high. And so that means companies need to rethink about the ROI of their investment, and the bar to make an investment is much higher than it was, to help them think through this reset and come up with the best plan to maximize the potential of the company.
So let's talk a bit about cyber. You guys invested in CrowdStrike, I think 9 years ago. And today it's clear it's one of the best cyber companies out there. And you invested in Snyk 4 years ago, and it seems like it's heading that direction as well. What would you say are the kind of future sectors within cybersecurity that you are super interested in and that you take a very close look today?
Yeah, so Axel has been, a very active investor in security on all continents. So our US team and Samir led our investment in CrowdStrike. Like on the European side, we invested in Snyk. So for us, cyber has always been one of these areas where we have, spent a lot of time developing, it's one of these prepared mind that is ongoing, and we're actually right now still doing a lot of work on it. I think if we look at the recent trend in security, I think the main one that happened in the past, in the past 3 years with the shift left. So what we call the shift left is actually the realization that if you give developers the tools to produce and develop secure software, it's a lot more efficient than having developer code reviewed by a security team and then identifying the issues, send it back to the developers for fixing, etc. And this is what Snyk has been focusing on. I mean, their entire premise was, let's make sure we can give developer tools to build secure code, and that's been super successful. And from there, they've been able to expand across different areas, starting with open source, moving to any type of code and containers, and now going into other areas as well. So there's been a very interesting expansion story for for their platform. So that's for us been like a very key trend that we continue to follow very closely. The second one, I think, has been around the cloud, and right now I would say that probably 40% of the workload, or 35-40% of the workload, have been moved on-prem to the cloud, and that move to the cloud. So we're just like 1/3, 40% through this journey. So there's still a very long journey ahead of us. But basically, when you move all your infrastructure to the cloud, it creates a very different paradigm for security, because in the past you have your own data center, then it was all about setting up a perimeter around your resources and making sure that the wall around your castle and the moat in front of these walls were very deep, so no one could actually penetrate it. Now we're moving into a cloud world where everything is a lot more distributed, and that completely changes the kind of tool that you need to maintain a secure environment. And so this is basically another area that is going, a ton of momentum, and that's also an area that Snyk is actually looking at very closely, launching their CSPM product, etc. So this is a second area where we keep seeing a lot of innovation. And around cloud, you have also the SaaS application. How do you manage your SaaS application securely, etc. So that's really a second area. The third area is really around data. As you know, the number of data is just continues to explode and grow exponentially, and a lot of this data is very sensitive. The compliance layer that you have on top of this data is becoming even more stringent. So data is the best and the most valuable asset for many companies, and the companies need to protect this asset. And so especially as you move to the cloud, because when you move to the cloud, it is very easy for a developer to just start an instance of a database and play with it, use it for a test, and then suddenly they don't need it anymore, but that data remains in the cloud somewhere, not connected to anything, and no one knows that it's there. So it is very important for companies to have a clear view of what data do they have in the clouds, where, and what is the security posture of of this data. Does it need to be encrypted? Does it not need to be encrypted? Who has access to it, etc. So we see that as a very emerging but super interesting area of security. We actually just made an investment in an Israeli company called Cyera, who is actually going after problem and getting a lot of momentum right now. So these are kind of three key trends. I think the fourth one I would mention, which obviously accelerated a lot in the past couple of years, is remote work. And so as a lot of employees are now working from home or working in a hybrid environment, the question is, what does this mean for security? And if you want employees to be able to use their own computer at home, what does this mean in terms of security tool that you need to make sure that you can isolate some of the resources of their device so that it kind of creates a corporate environment within within the private environment of your employee. And so that has given rise to a set of tools, and that's also another trend that we are monitoring very closely.
Do you have any take on API security? Do you think it's a standalone big enough sector? You spoke a bit about SaaS security as part of the cloud, which is definitely one of the sectors that we see growing. Secure browsing is also kind of a vector that we've seen lately. Do you have any take on those subsectors?
Well, I mean, I think they all feed in some the theme that I mentioned. I think when for me, if you look at cloud security, SaaS security, API security, all this is very much connected, right? It's basically linked to the paradigm that yes, applications are moving to the cloud. As they're moving to the cloud, there is, all cloud applications have APIs, a lot more connectivity, and being able to monitor this connectivity is very important. I think the question around cloud security right now is what is a standalone category versus what is going to be an add-on to an existing platform. And I think that is, the big question. And typically companies start with a great insertion point, and then they evolve from there to become or not a full platform. So for me, are these areas interesting? I think they are interesting as long as they can evolve in a full platform. So we just need to make sure that the insertion point is good enough so that you can get momentum, but also that you have enough breathing room around it. I mean, you mentioned, Snyk and CrowdStrike. I mean, these are already big platforms which are expanding across different categories. And so the question is, are you going to be an add-on to this platform? Are you going to be a standalone play? Do you have enough room around your solution to actually grow and create something that is large enough? So I would say all these categories are things that we're having a very close look at right now, and we're trying to figure out what is who are the best team tackling this problem, and do they have a product we think has enough potential to kind of grow beyond the initial insertion point.
So maybe some questions about the future. I know, how do you see the market playing out in the near term, maybe for startups, for VC, or in generally, we hear all type of projections. Do you have any kind of thesis that you are working based on?
Yeah, I mean, I think right now, we are really trying to focus our new investments on these companies that have a product which can demonstrate a very clear ROI to their customers, who are focusing on more efficiency versus growth at all costs. So I think from across the different themes that I've mentioned, that where we're looking, I think these are kind of some of the key elements that we are prioritizing for now. I mean, it's been interesting to see that how demand has been affected differently across different category right now. I think the next couple of quarters are going to be very critical, as a lot of public companies are going to and have started and will continue to release their Q2 numbers and see where this is going. But I would say that the big trends that are driving the innovation right now, I mean, if you look at overall kind of the shifts, to the cloud. On the consumer side, everything needs to be done with your mobile phone, like all these services, they continue to be there. You look at security remains a very strong trend that's not going to go away. We're also seeing some very interesting happening in the crypto space. So if you look at the digital transformation is going to be even more important for company, how they get, as now they're getting more pressure on the bottom line, and they need more automation, and they need to improve their internal efficiency. So if you look at, I think, all the trends that have been really accelerated in the past couple of years, they're still there. They're secular trend. They're going to continue for the next 10 years, and they're going to continue to push the tech ecosystem globally, and of course in Europe and Israel. And these are the trends that we're investing behind, and we don't think that they're going to go away. And we're actually very bullish about kind of this next cycle of investments. I mean, if you look at historically, any slowdown, any downturns has been a very fertile ground to generate a lot of category leaders. So we're, from an investment standpoint, like, we're super optimistic about what's going to happen in the next couple of years.
So I'm sure we'll keep seeing great stuff coming from your front. And I want to thank you so much, and we highly appreciate the time and the insight that you've shared with us today. Thank you, Philip.
Thank you, Beryl. It was my pleasure.